Good morning, traders and investors. My name is Roger Scott, and I'm the head strategist for WealthPress. Today is Tuesday. It's the 9th of February. It's the second day of the second week of the second month in 2021. How about that? I love it. It's only about 8:10. The market's going to open up in about an hour and 20 minutes. And as usual, we do our analysis before the market opens for the opening. Now, that means that during the session, we can execute trades instead of trying to figure out what's going on. And that's how you should always do your analysis. Figure things out before the opening bell based on the overnight data, based on what the global markets did, based on what happened yesterday, and then make your trades during market hours. So futures are down about 68 points, nothing really crazy, nothing out of the ordinary here. And the main focus that I look at when I look at pre-market data, I look to see if all the indices are pretty much on the same page. Because if I see the S&P is up 50 points, I'm making this up obviously, and the NASDAQ is down 100 points, then we know that there's something something with particular stocks or so what. But in this case, we could see here that the downside on each of these sectors is fairly even with each other. Just to give you guys an idea, for every, and I learned this a long time ago, for every 8 points on the Dow, give or take, that's 1 point on the S&P 500. So just take the S&P, times it by 7 to 8, that's the ballpark. And if you do that, see 7 times 8, about 60 something, 67, it's right there. So that's how you can quickly determine if the Dow, the S&P is out. For every 7 to 8 Dow points, 1 S&P point. Just gave you some trivia there. Why you would need that, I have no idea, but it may be useful. Anyhow, nothing really going on right now. There's not much news going on. We have news coming out on Thursday and somewhat on Friday, and tomorrow, the CPI that's actually the big week report, jobless claims and CPI. But this is the first week of the year where we're not really heavy on Fed data, but we are heavy on the earnings front because we have the second part of the S&P reporting. So far, the numbers are above expectations. Looking at the bond market, we are still moving down, and I think the long bond will continue moving lower. Interest rates, long-term rates are moving higher. Short-term rates are going to be stuck here for a long time. But if you're looking at a 20-year plus or a 10-year plus rate, bonds are moving lower, which means interest rates are headed higher. Look, the bottom line is we're still going to be at ultra low levels for at least 2 to 3 years, but the sentiment is moving higher. Remember, there's an inverse relationship between bonds and interest rates. So if long bonds move lower, that means long interest rates move higher. Now let's talk about global economy. And again, there's not much to report today, which is positive because we've had too much data lately. Markets are mixed. Actually, they're a little lighter. After another record-setting rally on Wall Street, investors are encouraged by earnings, which about 90% are beating revenue and estimates. And this is the fourth quarter earnings for 2020. And this is going to be the last quarter we're expecting negative numbers. So the pressure to move higher is ahead. That carrot is dangling nice and getting fat in front of us, which means there's something moving ahead. We're moving towards higher prices, which is positive. So news that a surge in COVID cases is easing, which is great. Progress is in distribution vaccines and the possibility of U.S. government stimulus. Though that is the carrot. Those are the three things that make up the carrot right now. COVID cases easing, progress in vaccines, positive earnings, and more stimulus. That's the carrot that we all have in front of us right now that's causing the market to be driven higher. President Biden and Democrats appear to be moving forward with a 1.9 trillion with a T COVID stimulus plan. Includes a rise in federal required minimum wage and cash aid to households. And I think that's going to be significant. Tesla rose 1.3% on Monday after the company said it purchased 1.5 billion with a B in Bitcoin and plans to allow customers to pay for their electric cars with digital currency. That's a first. If you want me to be honest with you, and I know you always do, I thought Amazon was going to be the first. I thought Amazon was going to create their own digital currency, and I thought Amazon was going to start accepting it. But it looks like PayPal and Square are getting into the digital currency game, accepting PayPal, accepting, I said it backwards, PayPal accepting Bitcoin, and now finally Tesla accepting cryptos. That is significant, 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 significant. And again, a few more large S&P 500 companies start accepting Bitcoin, it's going to become more acceptable. Energy prices are rising. Crude oil is at $58 a barrel. There is still a huge, huge, huge surplus of traditional crude oil. I would be very hesitant to move higher on crude oil, especially if you look at this chart, and I'll show you what I'm looking for. So you see it says strong buy here, and if you look at a chart, it's moving higher, but that's not the full story. Let me show you something. That's 6 months, right? But let's look at it over a year. See the problem I'm having with crude oil? Look at where we were prior to the pandemic. We were around 55. Well, XLE right now is only at 44. So we're not anywhere close to getting out of this mess. And if the market turns based on COVID, guess what sector is going to come back down? Because the long-term trend for energies, as you can see here, is lower. And we're still not at the 200-day moving average. So there's a good chance we can back away from here. I want to see us break the 200-day moving average on a weekly basis in the energy market. Now, in terms of the overall stock market, I think the market is grossly overbought. But the problem is, or I don't know if that's a problem or a good thing, we could stay here for a bit longer. The put to call ratio, you could see here, the higher we go, these are bear. This is when the bears control the market, and this is when the bears get really bearish and the bulls get really bullish, and the market turns. And we're getting right now really, really bearish. We're at 0.69, and I think if we get to 0.65, that rubber band is going to stretch out. Plus, if you look at this with the broad market, if you look at this with the chart, and as I've been saying every day, look at the momentum levels. Look at this. I want you to see that we are in exactly the same environment we were prior to the pandemic. Momentum levels are moving lower, prices moving higher. Momentum levels are moving higher, prices moving higher, prices moving higher, but momentum levels are moving lower. Look at that. Lower momentum levels, lower momentum levels. Higher price, lower momentum levels. Let me show you on a 6-month basis. This is the recent upswing, and look at the RSI. This poor RSI can't even make it to 67 right now. That is one hell of a stretched out market. And this put to call ratio is confirming that. Now, typically, usually, most of the time, under most circumstances, the put to call ratio is just random, like this. It just goes like a little rubber band. But sometimes it stretches out. And right now it's telling us that bulls are really, really controlling this market. And there's a good chance we're going to have a pullback. Now, the good thing about the put to call ratio and the stretched out market environment, it doesn't really tell us that we're going to have a bear market. It just tells us that that rubber band is stretched out and it needs to snap. So all it's saying is, all this is saying is we're going to pull back the other way very soon. But it doesn't mean we're going to go all the way down here. It means we could just go down to the 50-day moving average, or to the twilight zone, or to the 200-day moving average. That's what I'm really seeing. I'm not seeing a bear market, not with these type of financials in place, or these type of economic financial numbers and the stimulus and all of the goodies that Biden wants to bring to the table. But what I am seeing is a grossly overbought market that needs to sell off in order to rise again. And the put to call ratio is confirming this. This is telling me the market's getting overly bullish. The fact that momentum levels can't get to 64 while the S&P is at all-time highs, we are going to have a short little baby meltdown. Baby meltdown. Why don't we call it that? A baby meltdown. I like it. That's cute. So be prepared for that. And on that note, stocks are a little overbought right now. So I'm going to give you 2 stocks that are on my chopping block. Chopping block. First one, Progressive Insurance. It's breaking the 200-day moving average. When things break the 200-day moving average and it doesn't bounce fast like this, it's been hovering around the 200-day moving average, the odds are it's going to go lower. And if you look at this stock over long term, it's near the 85 level. This sucker can drop all the way to the 75 level. So PGR, Progressive Corporation Insurance, is just not, I'm not loving this company. Lower highs, breaking down the 200-day moving average, while the S&P is making all-time highs. If this index cools off, Progressive is gonna, let me do that again, sound effects. All right, next one, Ritchie Brothers auctions. Auctions were really, really hot because a lot of these auctioneers are selling businesses or parts, business equipment, business supplies. But I guess we're looking back into the reopening. It looks like this thing peaked out before New Year's and we've been going lower. And again, markets are making new high. If you're seeing a stock that's trading near the 200-day moving average, something is not kosher in its world. Again, I would probably wait for it to trade to the 200-day moving average, maybe break down below 55, put an alert at 55. But if you look long term, this stock can go all the way to 40. And again, you don't need to sell these short. You can buy puts, you can sell calls, you can use these to hedge your long exposure in the stock market. There's a lot of ways to use these stocks. But what I want you to learn out of this is this. Have you noticed the market's not opening for another hour and 9 minutes? But I just did my complete analysis. I know where the bond market is. I know where the energies are. I know where the sentiment is. I'm doing my analysis before the market opens. So when the market opens, I don't have to sit here and flubber with charts and look at all these things. I can focus on price levels and alerts and execution. During market hours, you have to be an executioner, not figuring out what to do. The best analysis is done before the opening bell. And looking at yesterday's data, folks, it'll bankrupt you. You might look at a stock market when you go to bed and wake up, completely different story. Things change overnight. That's why we do our analysis in the morning before the opening bell. Markets move fast. Yesterday might as well be a year ago. Very, very true. And that's why I've been getting helpful tips and tricks from the world's number one pre-market trader. That's right. And he doesn't trade before the market opens. He does his analysis before the market opens and executes during market hours. This guy cracked an all-new style of trading, allows us to spot potential winning trades before most people even wake up. Like right now, it's only 5:20 a.m. in Pacific time, but look at me, I'm all up and wild already. In fact, this pre-market strategy has already handed out 20 wins out of the last 22 trades. Man, I love that. 20 wins out of 22 trades. What could be better than that? If you like to see these trades in action, click on the link below to watch this urgent video that I put together for you. And make sure you like this video and subscribe to our channel on YouTube if you're watching on YouTube. And stay ahead of the market by being the first to be notified when a new video's out. And post comments for me here. I need comments and feedback. And don't forget, 2 dogs with fleas, Progressive, PGR, and RBA. I'll talk to you guys soon, and I hope you all behave yourselves. Bye, everyone.